Hello subscribers, hello again, this is Alex with MasterChartsTrading.com and this is market recap for Friday, March 3rd, 2023. As always, please don't forget to hit the like button, subscribe to this channel and share this video with others. Also enable the notification for this channel so you can be on top of any of the new videos that I'm releasing. These actions are what keeps this channel going. Thank you in advance. Stock traders, myself included, are more optimistic this week. Stocks, I'll explain what I mean there. Stocks are doing much better than last week. Junk debt also is sending positive vibes. This is good for stocks. Many asset classes, I think, are about to rally. This includes bonds, gold, Bitcoin. A rally in bonds would imply lower interest rates, so stay tuned. If you are a subscriber, stay tuned for a separate video. We will cover a whole bunch of stocks. You can see them on this list. Also, if you're not a subscriber, then consider signing up by going to MasterChartsTrading.com and sign up there. On this chart, you can see S&P 500 on the interface called TradingView.com. You can see where I'm hovering, TradingView.com. So you can get a free TradingView account there. And then once you are ready, you can also get my indicators. On this chart, these indicators, to get my indicators, follow the link in the description of the video, and I will open the door for you on TradingView.com so that you can see my indicator lines on your chart. On this chart, S&P 500 was in a downtrend until relatively recently, and we were selling it short as late as here September of last year, 2022. Then we had what's called a hammer candlestick. I'm hovering over it right now, right there on Thursday, October 13th. Hammer candlesticks literally look like a hammer, and it usually implies a bottom of some sort. So that's exactly what I think happened here. We hit a bottom and then we started to move higher. On Thursday, the 10th of November, we had a green giant candlestick right there where I'm hovering. Green giant or green or large green candlestick just means that buyers were buying throughout the entire session of this week, of this day. And it means that there was a lot of buying pressure, basically. So then for quite a while, from November until late mid-December, we had pretty much sideways action. But notice that we had those downward-facing arrows. So these are short signals. Now, I was already doubting that we're still in a downtrend back in October, November, because of those two things I just told you, because of the hammer candlestick and because of this very large green candle. So I did not send any of these short signals to my subscribers. I think they were what's called bear traps. Notice that downward movement for the stock, in this case S&P 500, was non-existent to very small. Now on Thursday, the 2nd of February, where I'm hovering, we touched this blue support resistance line. So far, we haven't closed above it. However, if we look on ETF SPY, the S&P 500 ETF SPY, okay, and notice where I'm hovering, it says ADJ. It just means that it's adjusted for dividends. Notice that we closed above this line on Thursday, the 2nd of February, where I'm hovering. This is a signal to buy. Okay, this also implies a new bull market, new uptrend for stocks. New bull market for stocks also means new all-time record highs. So it is quite likely now that we will begin hitting all-time record highs in the near term. Now, it doesn't mean we cannot, have back and forth in the next few days to weeks. In fact, this is exactly what's happening. Notice this line here that I drew in on 10th of February, right there. That's the beginning of this line. It's what's called a ghost feed. And I think this is and it's been exactly following it. I mean, literally to the T. the reason why I drew it in that way is because I can project my indicators into the future. I'm projecting them now. You can see kind of like darker blue lines into the future. Notice what happened is the price came down towards this red support resistance line, and so far has found support there, did not break below it. On 2nd of March, yesterday, we touched this line, but so far we have rallied. So a rally um, of some sort is most likely in the next few days to weeks. I'm predicting this type of price pattern where we are going to continue higher into late March, possibly pull back into mid-April and finally bottom around mid-April and then rally. Okay, so I've been getting some criticism about this, namely because I think this has to do with the war in Ukraine and presence or absence of Putin himself. Here on this chart, I have drawn this in on 1st of October, 3rd of October here, new low for Putin's war support in Russia. Okay, this is the actual number. What it is now is a really good question, but I'm hoping that I'm correct, and the lower his ratings go, the higher the stock market climbs. In that case, he will have additional pressure from the traders and investors worldwide to finally go away. Now, looking into the future, there is still a possibility that we will not do the same thing as I just described, meaning rally into late March, early April, and then bounce around and continue higher. There's also a good chance that we will continue like sideways to lower. Okay, so the lowest point projected into the future is where I'm hovering. Will start in mid to late April. I don't think it's a good idea to project indicators further out because the value of projection kind of drops the further you go out. So the way I see it right now, we will see. I don't exactly know exactly what price action. Obviously, nobody really knows, but I'm predicting my best case scenario is that we rally. What I just said, we rally into late March, bounce around, and then continue the rally into April. What's going to happen in the near term, not exactly sure. However, even if we don't immediately rally, we need to get down to this where I'm hovering yellow line at 3691 currently, 3691. To declare that we have a new bear market, because I think we do have a breakout here on the 2nd of February if we put in the dividends, like I just said, for S&P 500 ETF SPY. For SPY itself, that level would be 360, about 360. If we get to that level, to 360, in the near term, April to May, then that's it. I think we might actually collapse even significantly further. However, things do look much better this week than last week, and this is a Dow Jones here. YM1 exclamation points. This is Dow Jones futures. Okay, so Dow Jones futures actually broke out earlier than the rest of the stock market. There's the breakout in late November. At that point, I started to think about Dow Jones as being in a new uptrend and no longer in a downtrend as it was up until recently. Right this instant, the Dow Jones price index came down towards this blue support resistance line and is finding support there. In fact, we want to be buying it, I think. Basically now, maybe I would just a little bit of a pullback perhaps, but overall, we were oversold and in an uptrend. And this is where I want to be buying it, around the blue line. So fingers crossed, Dow Jones will continue higher. If we look on the weekly time frame, Dow Jones is actually leading the other indices higher. So here's Dow Jones on the weekly time frame. I'm going to turn off this for a little while. So I kind of drew this in a while back. Notice this all-time record high on January in January of 2022, where I'm hovering. Okay. Now, what I think could happen is we could get to this level, continue higher from today's level, get to this level, and then this would be like inverted, or rather just like a cup or a saucer pattern. And the way people traders estimate the strength of a breakout once we have a new all-time record high set, we can look at the depth of this pattern. So depth of this pattern is around 20-some%. So it is easy for Dow Jones to rally towards 44,000 if we have a new record high. So we're watching for this very closely. We're already buying Dow Jones. This is a buying opportunity. And if we get to new all-time record highs, well, we will be already in a good position by then. NASDAQ also is moving higher as most stocks. So far, we are lagging the general stock market, but that doesn't mean we're doing something different. Correlations between the various stock indices are very high. So new bull market for NASDAQ is the blue line, which is at 13474, and it is currently about 9% away from today's prices, which is not that far. So watching the NASDAQ, I think NASDAQ could outperform in the next few months to years. Looking at the Russell 2000 small caps index, also is now in a new uptrend. It has broken out where I'm hovering on February 1st, right there. February 1st is the breakout for Russell 2000 small caps index, and it's another part of the stock market. So we now have Dow Jones, Russell 2000, and by some definition S&P 500 as well in a new uptrend. So we're waiting for the NASDAQ to catch up at this point. But I would be buying Russell 2000 small caps index. To back this whole theory up, I'm looking right now at junk debt, high yield bonds ETF, ticker symbol JNK. So the reason why I look at high yield bonds is because of the correlations between high yield bonds and stocks. So we can look at high yield bonds on the weekly time frame. Notice this down below here, the yellow graph, and mostly it spends its time correlating positively with S&P 500. In other words, when S&P 500 goes up, junk debt also goes up. Currently, that correlation stands at 0.77, or 77% of the time of the weeks that S&P goes up, the junk debt also goes up. Junk debt also has broken up into a new uptrend, also known as a new bull market, right there where I'm hovering on 1st of February, and then pulled back. And notice exactly how it bottomed. It bottomed exactly at this red support resistance line. And this is an interesting thing to note. In other words, if you have my indicators, then you can kind of anticipate the price action. And this is exactly what happened here. We came down towards this line and we bounced off of it. And now we're again approaching this blue line, which means that we are on our way to again continue higher. So again, with the breakout right there on 2nd of February or even 1st of February, and then this is a signal to buy, and then another opportunity I think will be very soon if we close above this blue line. Taken together, stocks and junk debt are moving higher. Very good news for high yield bonds or for stock investors. Looking at interest rates, so we're looking right now at TYX, 30-year Treasury bond yield. Now, I have my indicators here as well. It's pretty obvious what's happening here. We have topped, I think we have topped out right there on the 24th of October. And since then, we've been kind of coming down. So notice two potential opportunities to sell short if you like to look at the tops. So this is a second time we're finding resistance currently at this level at the green line, which is around 4%. These are actual percent. We can also project the indicators into the future. Notice that the lines are getting closer together. So it would be easier for this security to get to the bearish levels. And there they are. The bearish levels are around 3.44%. Okay, so at that point, we will flip into thinking that uh, the interest rates will actually continue lower despite all of the Federal Reserve talk. This would mean to me that I want to be buying bonds, TLT. I want to be buying treasuries. I want to be buying them now. Okay, this also means that not only treasuries. I mean, we're looking at all spectrum of various bonds, and short-term yields are outrageous. So that means that bonds are super cheap. Okay, that's just something to think about. These are treasury bonds of the United States of America. These are the most secure securities you can think about in this 21st century time frame, which sounds weird because some say that because of we have such a huge debt, but relatively speaking to other securities out there, treasury bonds are actually quite good. Okay, and because of the way interest rates are performing or um, acting, I think we will see interest rates come down, implying a rally for bonds. Okay, so I'm actually thinking about buying bonds as well, treasury bonds specifically. Okay, and there's the treasury bonds potential. Okay, so this is not exactly what I normally do, but this is because of the risk will be super low. Your risk would be the new low, and even potentially like the yellow line. So like maybe this is your risk right now. If I was to buy it right this instant, this would be my stop. Maybe like that much. That's a 6% stop. However, I think we could easily do that. That's 18%, but most likely if we get to the 18%, we're going to get to the green line. So this is what I'm saying is your risk is very low, but the reward could be huge for treasury bonds. And this is TLT specifically, TLT, long dated treasuries. I mean, on the shorter term, you can also probably get decent deals right now. Okay, so something to think about. Moving on to the dollar index, DXY. So very briefly, I'm kind of running over. I may need to end up quicker. Okay, so DXY, dollar currency index, has broken down into a new downtrend. It has topped out. Dollar has topped out right there where I'm hovering on in September of last year, and now has been dropping, into January, and on January 11th, where I'm hovering right there, it has entered a new bear market. So that means the dollar will have a tendency of moving lower, a new downtrend. Now, it didn't mean that we're not going to be moving higher for a little while, and in fact, I was projecting my indicators into the future, and on right there where I'm hovering on January 30th, I predicted that we are going to continue higher into April, and we're nailing it. I mean, this is the prediction, and this is exactly what we're doing. So we are super close to where I think we will top out. I think we will top out. We're almost there as far as topping out. I think for the dollar. Time wise, I think we need to just kind of bite the bullet and wait until April. Unfortunately. thus more uncertainty in the world about various things. However, I'm already hearing about various Federal Reserve officials saying that maybe they should stop with the interest rates rises, and this is exactly what I'm saying here. Federal Reserve will blink. By extension, the dollar dropping is good for gold. This is gold XAU divided by US dollar. When the bottom part of this equation, US dollar, is getting smaller, the top part will pull this currency pair higher. Okay, did that make any sense? XAU divided by USD. Send me a message. You can go to Master Charts Trading. I'm going to quickly remind you that please don't forget to hit the like button, subscribe to this channel, and share this video. Let's continue. So, gold broke out into a new uptrend by closing above this blue support resistance line. Okay, this is all I need to really know. So this is why I like my indicators so much. Friday, January 13th, right there, Friday the 13th, gold broke out into a new uptrend and then pulled back. Okay, projecting the indicators into the future, we can see that the bottom part, or rather the lowest part, will occur right there on April 11th. So again, we need to wait until April for some sort of a decisive breakthrough either way. I'm almost certain this decisive breakthrough will happen in Ukraine. And unfortunately, it could go either way right now. Fingers crossed, uh, the right people will win, Ukrainians. Or at least Putin will just go away finally. Looking at this chart, gold is again breaking out into another buying signal basically right now. Today occurred, but we already have positions open. We're buying gold. We're buying gold miners because we're anticipating for gold and gold miners to rally because of weakness in dollar. Bitcoin. So Bitcoin has also broken out into a new uptrend. Notice this breakout right there on 15th of February. This is another, or rather, this is the signal for us to buy. However, notice just the way the indicators curve down here from, you can see it bottoming here on February 18th. And I sent to my subscribers this message. Ideal area to buy Bitcoin is around 22,000. So we're there. Most likely we'll touch this blue support resistance line, do something around it, and then finally rally. I think Bitcoin has broken out into a new uptrend, and we should be thinking about buying it. Excuse me. Head over to MasterChartsTrading.com. Click on sign up for one of the products. I have two products and two packages. So trading indicators and these lines on the chart. You can trade pretty much anything under the sun using them. Newsletters, I send out daily alerts about various stocks we cover. This week we're going to cover all of these various stocks. You can see there's quite a bit. Various ETFs, American ETFs, also worldwide ETFs, some of the large cap stocks like Cisco, Salesforce, IBM, etc. Some of the foreign and more speculative ones like Alibaba, Pinterest, VMware, and some of the gold ones as well, like Royal Gold, etc. So these opportunities are sent out on daily basis. So those are the newsletters. Best thing to do is to get both newsletters and trading indicators at $59.95 per month. I think it's a great deal. So head over to MasterChartsTrading.com and make a purchase. Also, don't forget, please, again, to hit the like button, subscribe to this channel, share this video. This is what keeps the channel going. Again, thank you for watching and have another great trading week. Bye-bye.